So Dave, I know in our planning practice when we're working with a lot of business owners, we often enter a conversation. It goes something like this. Hey Dave, I'm really excited. I run this big business. We've outgrown our space. I found a great piece of property. I bought it. I got a bank loan I'm securing, and I'm going to build a brand new manufacturing facility with an office space and storage. And I'm just so excited because we've been having, as you know, a banner year over the last few years. And I'm looking forward to having a huge tax deduction by building this building. Any idea what that'll look like for me as the company moves forward?
Yeah, yeah, absolutely. So, well, unfortunately, Mr. and Mrs. Client, what I would tell you is you're probably not going to get as large of a deduction as you think you might, because real estate in general has a depreciation schedule that's assigned to it by the IRS. Okay, certain tangible assets like real estate are spread. The depreciation expense is spread out over a certain length of time. Okay, so in order to get a larger deduction for depreciation, what we would recommend to you is that you hire a firm that specializes in what's called cost segregation. Cost segregation is essentially, instead of you just taking the asset as itself, you could actually depreciate each individual asset within that building. You might say, well, what do you mean by that? Well, the elevator shaft, right? Elevators have a certain a depreciation schedule attached to them that is different than in the actual building. And so each component of that building actually has its own depreciation schedule to it that could allow for larger deductions for you today than just depreciating the building in general. Now, what I would also tell you, Mr. or Mrs. Client, is that these cost segregation studies are typically 50 to 70 grand. They're pretty expensive because you have to hire an engineer to look at it. However, this $3 or $4 million building that you're in, instead of you spreading that out over maybe a 27-year period of time, as an example, where you can only deduct that $3 million building each a portion of it over a 27-year time frame. Maybe you could take that $3 million and deduct it in a couple of years as far as the depreciation expense. So it may be worth paying a firm like a firm that does cost segregation studies to help give you a greater deduction up front. So cost segregation is essentially saying, hey, instead of me just taking my commercial property and depreciating it based on the IRS schedule, I can go in and depreciate each individual component of that building. The steel that it took has its own separate depreciation schedule, as an example, and probably fast forward some of that depreciation deduction faster. So hopefully that helps, and hopefully, Mr. Client, I didn't burst your bubble here, but all kidding aside, that's how cost segregation works over just regular depreciation.
So if I understand that correct, just to hear you there, if I build it from scratch, I don't need to do cost segregation. It's very much like if I bought an existing building. If I'm thinking of this right, if I go in and do a renovation and I put the new elevator in, I would think to deduct that as normal, as the standard, just because I'm renovating. So this almost has the same feel, even though it's a brand new structure, like I've renovated, so I can break each thing out, cranes, etc., that goes attached to the building.
That's exactly right. Great example.
Got it. Well, thanks for explaining. I know we have that conversation with clients because they're always looking for a tax deduction. If that's you, you're watching this video and maybe you have plans to buy a piece of property, build a building, or anything that in regards to financial, we're happy to talk to you and teach you more about this and coordinate with your CPA. Reach out to us on instrumentalwealth.com. Reach out on social media, connect with us there, schedule some time, and we hope to talk to you soon.